The Market Review, Saturday, March 29th, 2025. The financial markets experienced notable declines this week, influenced by heightened inflation concerns, deteriorating consumer sentiment, and new trade policy developments. The Dow Jones Industrial Average fell by 1.6% on Friday, culminating in a weekly loss of 1.6%. The S&P 500 index declined 2% on Friday, ending the week down 1.5%. The Nasdaq Composite dropped 2.2% on Friday, leading to a weekly decrease of 2.6% and a year-to-date loss of 10.3%. Contributing factors: the inflation data. The core personal consumption expenditures, PCE price index, a key inflation gauge, rose to 2.8% in February, intensifying concerns about persistent inflation. Consumer sentiment. The University of Michigan's survey indicated that consumer sentiment has fallen to its lowest level since 2022, raising fears of reduced consumer spending. Trade policy. President Trump's announcement of a 25% tariff on auto imports has heightened trade war anxieties, significantly impacting automaker stocks. Sector highlights. Automotive. Shares of major automakers, including General Motors, experienced sharp declines due to the newly announced tariffs. Technology. Tech giants such as Meta, Amazon, Netflix, and Alphabet faced significant losses amid broader market downturns. Safe haven assets. Gold. Prices surged to a record high, reflecting investors' flight to safety amid market volatility. Treasury yields. The 10-year Treasury yield decreased to 4.25% as bond prices rose. Global markets. Europe. European stock markets declined to a two-week low, with automaker shares notably affected by the U.S. auto tariffs. Asia. Japan's Topix index rose by 3.3% during the week, contrasting with declines in other regions. Investor outlook. While the markets faced significant headwinds this week, some investors view the upcoming first quarter earnings season and further clarity on trade policies as potential catalysts for market stabilization and future growth. Market sentiment on X or Twitter. This week, discussions on X reflected significant concern over financial markets, particularly focusing on rising inflation, declining consumer sentiment, and escalating trade tensions due to new tariffs. Inflation concerns. Users expressed alarm over the latest inflation data, with the core personal consumption expenditures, PCE price index, rising to 2.8% in February. This increase intensified fears of persistent inflation impacting the economy. Consumer sentiment. The University of Michigan survey indicating a drop in consumer sentiment to its lowest level since 2022 sparked discussions about potential reductions in consumer spending and overall economic health. Trade policy and tariffs. President Trump's announcement of a 25% tariff on auto imports led to widespread debate about the implications for global trade and the automotive industry. Many users expressed concern over the potential for a trade war and its impact on markets. Market volatility. The significant declines in major stock indices, with the Dow Jones Industrial Average dropping over 700 points and the Nasdaq falling 2.7%, were widely discussed. Users analyzed the factors contributing to the sell-off and speculated on future market movements. Safe haven assets. The surge in gold prices to new highs was noted as investors sought safe haven assets amid market volatility. Discussions centered around the role of gold as a hedge against inflation and economic uncertainty. Overall, the sentiment on X this week was predominantly cautious and concerned, with users closely monitoring economic indicators and policy developments affecting financial markets. Are investors bullish or bearish? Investor sentiment on X, formerly known as Twitter, this week has been predominantly bearish. Discussions have centered around concerns over rising inflation, declining consumer sentiment, and escalating trade tensions due to newly announced tariffs. These factors have contributed to significant market volatility, leading many users to express apprehension about the near-term direction of financial markets. This cautious outlook on X aligns with broader investor sentiment trends. For instance, the American Association of Individual Investors, or AAII, reported that as of March 13, 2025, only 29.14% of investors were bullish on the market, a decrease from previous weeks and below the long-term average of 37.73%. Overall, the prevailing mood among investors on X appears to be one of caution and concern, reflecting broader market apprehensions. Market sentiment and X discussions about Bitcoin and crypto. Based on posts found on X over the past week, the chatter and sentiment about Bitcoin reflect a mix of cautious optimism, bearish undertones, and balanced perspectives with some fluctuations in confidence tied to price movements and market indicators. Here's a breakdown. Bitcoin's price has been a focal point, with posts noting a dip to 81,600 on March 29th, alongside a significant $347 million in liquidations in a single day, shaking market confidence. This was paired with the drop in the crypto fear and greed index to 27 out of 100, signaling fear and a bearish sentiment among some users. Earlier in the week, Bitcoin was described as moving sideways, with one user suggesting this boring phase might precede a bull run as retail traders lose interest. Sentiment scores and indices. Sentiment has varied across the week. On March 23rd, a user reported a cautiously optimistic lean, with the fear and greed index at 31, viewed as a potential contrarian buying signal. By March 25th, a sentiment analysis showed a 72% bullishness overall, with X-specific chatter at 68% positive mentions and 32% negative, alongside heightened engagements, 245,000 plus interactions. However, by March 26th, the fear and greed index rose to 47, neutral, indicating a more balanced sentiment midweek before the later dip. Bullish perspectives. Some users remain optimistic. Posts from March 22nd framed the current correction down nearly 30% from the top as a bull flag, a pattern seen in 2024, suggesting it's a normal part of the cycle to liquidate over-leveraged positions. Another user on the same day called Bitcoin bullish despite low volume, hinting at the possibility of one more run in this cycle. Influencer activity and engagement. There's notable interest from major crypto influencers, as mentioned in the March 25th post, contributing to the positive chatter. However, specific names or comments weren't detailed, so the extent of their impact is unclear from these posts alone. Other observations. A March 24th post referenced a 92% bullish sentiment for DOG Bitcoin on CoinMarketCap, but it's uncertain if this refers to Bitcoin itself or a related token, adding some ambiguity to the data. Overall, X chatter shows a community grappling with short-term volatility while debating longer-term potential. In summary, the past week's X sentiment about Bitcoin has shifted from cautious optimism and bullish undertones early on to a more fearful and bearish tone by March 29th, driven by a price drop and liquidations. However, some users maintain a bullish outlook, viewing corrections as part of a larger cycle. Engagement remains high, reflecting an active and divided conversation. What to expect? The upcoming week in the stock market is poised to be influenced by several key factors, including anticipated tariff announcements, economic data releases, and ongoing market volatility. On April 2nd, the U.S. is expected to announce new tariffs targeting various trading partners. This development may heighten market volatility as investors assess the potential impact on global trade dynamics and corporate earnings. Sectors such as automotive and manufacturing could be particularly affected. Economic data releases. U.S. employment report. The March jobs report, scheduled for release on April 4th, will provide insights into the labor market's health. A weaker than expected report could exacerbate concerns about economic growth. PMI surveys. Global Purchasing Managers Index, or PMI, data for both manufacturing and services sectors will be released throughout the week. These surveys offer timely feedback on business conditions and may influence market sentiment. Market volatility and defensive positioning. Given recent market fluctuations, investors may continue to favor defensive sectors such as energy, healthcare, and utilities, which have demonstrated resilience and economic uncertainties. Companies like Exxon, Mobil, Eli Lilly, and United Health Group have experienced gains, suggesting a cautious approach may persist. Some stocks to watch. Investors might monitor companies approaching key technical levels or those with strong relative strength. Notable examples include Deere & Company, Allstate, Sea Limited, Ollie's Bargain Outlet, and Travere Therapeutics. These stocks are near potential buy points and could present opportunities depending on market developments. Investor sentiment. The recent downturn in major indices, influenced by inflation concerns and declining consumer sentiment, has led to increased market caution. The S&P 500, Dow Jones Industrial Average, and Nasdaq Composite have all experienced significant declines, reflecting broader apprehensions about economic growth and trade policies. The stock market in the coming week is expected to navigate a complex landscape shaped by policy announcements and economic data. Investors should remain vigilant, closely monitor developments, and consider maintaining diversified portfolios to mitigate potential risks. The markets and where they stand in relation to major moving averages. In technical analysis, moving averages are essential tools for identifying market trends and potential support or resistance levels. The 50-day, 200 are particularly significant. The 50-day moving average, this short to medium-term indicator, smooths out price fluctuations to reveal the prevailing trend over approximately 10 weeks. The 200-day moving average, this long-term indicator, reflects the average closing price over about 40 weeks, helping to identify overarching market trends. When the current price is above both the 50-day moving average and the 200-day moving average, it suggests bullish momentum. Conversely, when the price is below these averages, it indicates bearish sentiment. The S&P 500 closed at 5,580.94, experiencing a decline of 1.9% from the previous close. While specific moving average values aren't provided in the available data, the recent downturn suggests the index may be approaching or has fallen below key moving averages, potentially signaling a shift in market sentiment. It's noteworthy that a recent analysis highlighted that only 21% of S&P 500 stocks were trading above their 200-day moving averages, a substantial decrease from 96% in April 2021. This reduction suggests a broad weakening across the market. Investors often monitor these moving averages for potential crossovers. The golden cross occurs when the 50-day moving average crosses above the 200-day moving average, typically viewed as a bullish signal. The death cross happens when the 50-day moving average crosses below the 200-day moving average, generally considered a bearish indicator. Given the current market conditions, with major indices approaching or falling below key moving averages, investors should exercise caution. As of the close on Friday, March 28, 2025, major U.S. stock indices have shown notable movements relative to key moving averages, which are critical indicators in technical analysis for assessing market trends. The S&P 500 closed below its 200-day moving average, a development often interpreted as a bearish signal. The S&P 500 remains below its 20-day, 50-day, 100-day, and 200-day moving averages, suggesting a prevailing bearish trend. In summary, The positioning of these major indices below their respective 20, 50, 100, and 200-day moving averages as of March 28, 2025, underscores a bearish outlook in the U.S. stock market. Investors should monitor these technical indicators closely as they provide insights into potential future market movements.